India's love for gold is unlike any other country in the world. Gold is present in weddings, festivals, family savings, and even emotional milestones. For generations, gold has represented safety, respect, and financial security. Many families trust gold more than banks, markets, or even property. However, what feels safe at a personal level creates serious problems at a national level. In a modern economy, money needs to move, circulate, and support growth. When too much wealth is locked into gold, the economy slowly loses momentum. To understand this behavior, we must look at history. In the past, India faced invasions, unstable rulers, and colonial exploitation. Banks were unreliable, and paper currency often lost value. During those times, gold protected families from uncertainty. This survival mindset passed down through generations. But today's India is different. The financial system is regulated, digital, and globally connected. Yet the old habit of hoarding gold continues, even when it no longer fits modern economic needs. India is consistently one of the largest gold buyers in the world. Every year, huge quantities of gold are imported to meet domestic demand. Unlike countries that import technology or machinery, India imports gold mainly for storage and ornamentation. This creates a unique problem. Gold does not increase productivity. Because India produces very little gold domestically, almost all gold is imported. This increases India's trade deficit, the difference between imports and exports. A high trade deficit means more money flows out of the country than comes in. When gold imports rise sharply, the deficit widens further. This makes the economy more vulnerable to global shocks and financial instability. Gold imports must be paid for in foreign currency, mainly US dollars. When gold demand rises, demand for dollars also increases. This weakens the Indian rupee. A weaker rupee is not just a technical issue. It affects the entire economy. Currency weakness reduces purchasing power and increases dependency on foreign capital. When the rupee weakens, imports become more expensive. India imports fuel, electronics, medical equipment, and industrial materials. As costs rise, fuel prices increase. Transport becomes costlier. Food prices rise due to higher logistics costs. Even people who never buy gold are affected through inflation. In this way, gold buying indirectly increases the cost of living for everyone. Gold stored at home stays idle. It does not support businesses or innovation. When savings move into physical gold, the economy loses growth capital. Banks rely on public deposits to provide loans. When people choose gold over savings accounts, deposits decline. Lower deposits mean fewer loans. Fewer loans mean slower business growth. Small and medium enterprises suffer the most, as they depend heavily on bank credit. This directly affects job creation and income growth. A growing economy needs employment opportunities. Factories, services, startups, and infrastructure projects generate jobs. Gold, on the other hand, creates limited employment after purchase. Once stored, it contributes very little to economic activity. Choosing productive assets over gold supports long-term national development. In recent years, global uncertainty has increased. Inflation, geopolitical conflicts, and market volatility have pushed investors toward gold. While this reaction is understandable, excessive gold buying during uncertain times worsens India's economic challenges. It increases imports, weakens the rupee, and limits financial flexibility. The Indian government and the Reserve Bank of India closely monitor gold imports. High gold demand complicates monetary policy decisions. Managing inflation, interest rates, and currency stability becomes harder when large amounts of money move into non-productive assets like gold. To address this issue, the government promotes alternatives such as sovereign gold bonds and digital investments. These options reduce the need for physical gold imports. They allow citizens to benefit from gold price movements while keeping money within the financial system. This supports both individual wealth and economic stability. Gold does not need to be eliminated from savings, but should not dominate investment choices. Diversified investments across banks, markets, and productive assets strengthen personal finances and support national growth. Individual decisions collectively shape the country's economic future. Gold will always have cultural significance in India, but excessive dependence on gold slows economic progress. A strong economy depends on productive investments, innovation, and financial participation. India's future growth lies not in locked wealth, but in active capital.